Did you know that millennials think they need to make $500,000 a year to be happy? How about Ryan Pineda and the 5 things he learned after losing millions of dollars? Of course, we'll talk about cancellations in housing and much, much more, folks. First, let's talk about an article that I read on Yahoo Finance. Yahoo Finance published an article talking about what generations, Gen X, baby boomers, Gen Z, and yes, millennials, how much did they need to make to be happy? And most of the generations, Gen X, baby boomers, Gen Z, were in the $200,000, $250, $280, somewhere around there. Millennials, $500,000 a year. Now, let's break down $500,000 a year. Folks, that's more than $40,000. But wait, Michael, that's gross, not net. So, I don't know, what do you want to call it, 28? 26? If you need to make $26,000 a year to be happy, you have a spending problem, not an income problem. Can you, seriously, $500,000 to be happy? Something is not right in the world. Let's talk about Ryan Pineda. Ryan Pineda has been on this channel. I was on his channel once. I want to talk about something, a video that, yes, I think you should go watch. It's about a half hour where he talks about the last 12 months being the hardest 12 months of his entrepreneurial career. Ryan breaks down 5 things that he learned as he went through these challenges. And folks, believe me, you do not want to be going through what Ryan went through, losing 7 figures, having to fund a apartment deal with his own capital, having to just build through this. So let me share with you what those 5 things are. 1, the cash conversion cycle, right? One of the things, if you're a flipper, is cash conversion is 6 months out. Maybe if you find a good deal, you should hotel it, wholesale it, novation, get the capital or the cash back quicker. 2, he's had to reset the company culture. The company culture got going, times were good. Maybe a few people got lazy, maybe a few people forgot what it took to get there, and yes, you have to reset the company culture. Number 3, you had to innovate. The company needs to evolve. And he talked about a story that he's working on a show with Grant Cardone. I'll leave it there. But yes, you've got to innovate or you go out of business. There's a lot of things changing in the economy and you need to be innovating. Number 4, communicate with your spouse. Ryan has done an excellent job over his entrepreneurial career of working basically a 40, 50-hour a week, Monday through Friday. He was home on the weekends. He was out by 5 o'clock. He had the life that many of us would want to live. The last 12 months has been a different story, and he's had to communicate that with his spouse. And of course, number 5, sometimes you have to go through a pruning stage in order to grow and be stronger. Again, sometimes the plant grows unwieldy. You need to prune it so that the best of the best can keep growing. I thought that was very, very interesting. How about Redfin? Redfin posted some numbers that are the worst ever. The housing market in October saw a 17.2% cancellation rate. This was in existing home sales. So again, you get into escrow, you go back to your mortgage broker, you get to your insurance broker, you get the final monthly number and you say, you know what? No, thank you. I do not want to do that. 54,000 cancellations. 54,000 cancellations. The other thing that Redfin noted is that fixer-uppers who take additional cash are being ignored. Folks, if you're watching this channel and you are an investor, I hope you heard that. Write disrespectful offers. Find your motivated sellers. Yes, some sellers aren't motivated. That is totally okay. You go find your motivated sellers. In the same article, we talked about there's a thumbtack home care price index. Folks, I can't make this up. I just report the news. Thumbtack home care price index says it takes a record $6,548 to run a household, which is a record. So if you are a buyer of a home, besides the mortgage payment, besides taxes, besides insurance, you could plan on spending an extra $6,528. How about these sad, sad facts? 25% of American households have debt from last holidays. I hope that's not you. I hope whatever you bought last year has been long since paid off. But if you are running in a cycle where you are buying Christmas this year and paying for it next year, find another way. Mortgage rates continue to drop. Remember, folks, we talked about this. We thought we saw peak rates at 8.03%. Last week they fell from 7.91 to 7.41. I think they've fallen further since. What happened? Well, applications up, offers up. These are things that you and I have been talking about for a while. 7.41 is obviously lower than 8%, but it's not magical. I believe it's going to be magic at 6.99. We get below that psychological 7% and watch out demand. And then finally, folks, are you looking for a 3% mortgage? 3.5, 4. Well, thanks to Resi Club and Lance Lambert, he has interviewed the CEO of Roam, R-O-A-M, Roam, and they are a application and technology that uses artificial intelligence to highlight assumable mortgages. Now, folks, most assumable mortgages, you need to be an owner-occupant. But hey, if you're an owner-occupant, wouldn't you like to assume a loan at 2.8, 3.1, whatever? Folks, I hope you have an amazing day. It is a 4-day weekend. Like, subscribe, comment, do the work, look at the deals. You know what's going on. That is, I have no idea what river that is because we're no longer on the Danube. We're on one of the other 3 rivers we're going through. But we are going through a series of locks for us to get to our next destination. I'll let you go ahead and admire that for a little bit, give you that view, and we will call it a day.